company and macroeconomic news front. Top down, on Wednesday the 19th, we have third quarter GDP figures from China and the latest UK and US monthly inflation data, as well as UK unemployment figures. On the same day, watch out for the latest beige book from the US Federal Reserve, which takes a deep dive into what's happening in the world's largest economy. Company-wise, we're smack bang in the middle of the US third quarter reporting season, while on this side of the pond, a number of FTSE 100 firms will be releasing trading updates. These include miner BHP Billiton on the 18th, fellow digger Rio Tinto and consumer goods and household care giant Reckitt Benckiser on the 19th, Sky hosts an Analyst meeting on the 20th, and Intercontinental Hotels will update us on the 21st. However, the stock that could really cause a fuss in a week ahead is Burberry. The FTSE 100 member is due to publish a first half trading statement on Tuesday the 18th, ahead of the actual interims on the 9th of November. Burberry is a leader in luxury goods, best known as a retailer of its trench coats and famous check, although it also does fragrances and has a wholesale and licensing arms too. Its powerful brand brings pricing power, but earnings growth has slowed, and CEO and Chief Creative Christopher Bailey came under pressure amid a view he was trying to do a bit too much. That issue was solved when Bailey announced Givenchy's Marco Gabbetti would come in as CEO in 2017, and the shares have been further helped by the pound's post-EU referendum collapse. The UK is a small portion of Burberry's sales, whose overseas earnings become worth more in sterling when they're translated into pounds. In fact, as part of July's first quarter statement, Bailey announced Burberry would get a £90 million profit lift from currency movements alone, rather than the previously forecast £50 million. As a result, Burberry's shares have begun to rally after a rotten run. So let's see if this statement can keep that momentum going. Other issues to watch out for are, first, like-for-like retail sales, which dipped 3% in Q1, slower Chinese markets and drops in tourist visits to Europe after a number of terror attacks were cited there, so let's see if momentum has improved since. Second, profits. Bailey has predicted earnings will be more second half weighted this year than they were last, and analysts are currently looking for a 2 to 3% drop at the pre-tax level to £407 million for the full year, a second straight decline. Third, costs and cash, where Burberry is looking to trim expenses by around £20 million as it spends £150 million on a share buyback programme. And finally, a progress report on Bailey's strategic push into the handbag market, which he believes is an area of weakness for the company. Recent news flow from the industry hasn't been great. Richemont and Hermes both disappointed with their summer updates, for example, and Burberry possibly needs to demonstrate some positive profit momentum from the core business and not just currency shifts if the stock is to regain past glories, especially as it trades on 19 times this year's earnings and 18 times next. Thank you very much for watching, and I look forward to seeing you again next time.